right, hello and welcome everyone to Phoenixville Public Library. I'm Mark Pinto, the Adult Services Director here, and we are pleased to have with us tonight Christian Weirich from Creative Capital Wealth Management Group. He's a senior wealth strategist there, and we're delighted to have him lead this three-part series on finance and investing. Tonight he'll be talking about financial basics. Those of you on Zoom, if you have questions during the presentation, feel free to type them in chat and I will relay them to Christian. And anybody in the room, feel free to raise your hand and Christian will call on you. And at the end of the program, anybody on Zoom can unmute themselves and ask it that way. All right, with that, Christian, take it away.
Thanks for coming out. Thanks for braving the weather. It's a trying circumstance to get out here to begin with. My name is Christian Weirich. Like Mark said, with Creative Capital Wealth Management Group. I've been in financial services my whole career, and I started back in the early 1990s in the previous century, and have been a financial advisor, a branch manager. I was recently a director of teaming, running a department, and then met Fred. Fred Hubler is the founder of Creative Capital Wealth Management Group. He's been in Phoenixville area for 20 plus years. And one of the attractive items of getting back into working with clients and being part of Fred's team was his emphasis on alternative investments, investments that aren't necessarily correlated to the stock market. And having access to that and being in that world and learning more about that was attractive to me, and it will be our third part of this series. So tonight's first part of this series is introducing and focusing on budgeting and making a realistic budget and some suggestions and tips and a conversation about that. Part two will be about investing in traditional investments, the stock market, stocks and bonds, ETFs, mutual funds, and then part three will deep dive into the types and styles of investments a layer beyond that. So it should be interesting. Feel free if you have questions. My structure for tonight, the content is focused, and we can get through that real quickly. If we want to sort of get back out and battle the elements, or if you have whatever questions you have, I'll do my best to answer them. And if I can't answer them, I'll go away, get the answer, and come back. Okay? So, as we're talking about budgeting and preparing a realistic budget, the big picture that we want to concentrate on is coming up with some strategies that help you create a livable budget, something that works within what you're doing with your life, and what we'll share with it is one methodology that there is to budgeting. Obviously you all probably have a system now, or you've tried multiple systems. Certainly there are plenty of different suggestions and ideas. When I came out of college a long time ago, there's the envelope system. And you know, I had my envelopes in my shoebox and I was moving checks around. So this evening we'll talk about the bucket system. And big picture, what it allows us to have is a way to look at and chunk up the income coming in and making that allocation of where are we putting this money. And so the budget, technically, what is a budget? It's a plan for your money, right? And the bucket system that we'll dive into tonight is the 50-30-20 approach. So what does that mean? So the 50-30-20 is a way to break up or bucket your income for the money coming into your household. The 50 is representative of 50% of your allocations. 50% of what you're putting your money towards are for the needs. And needs, you're well aware, these are the critical things that have to get paid to keep the lights on, literally the light bill. So rent, mortgage, all of the crucial monthly needs, requirements that you need to keep the house going, keep the apartment going. And the 30% will shift into wants, and the wants are the extras that have also importance, but can be cut back on, can be adjusted, are more willing to go without a bit for a period of time, or maybe look for a different alternative that's less expensive. So that's your wants bucket, and then the last bucket is the 20% of the allocations are going towards the savings and investments bucket. And part of that is not only retirement investing or debt service beyond the minimum, above and beyond whatever minimum requirement, but also we'll put into that 20% bucket the plan for an emergency fund. And we'll cover that in a little bit later. So it comes to tracking your personal financial health. The best thermometer of how am I doing is your net worth. So in terms of that, I need a measurement of, am I making progress, am I getting better, or things becoming more challenging? Net worth. The calculation for your net worth in the simplest form is take everything that you own, your assets, and subtract everything you owe, the liabilities. And what's that number? Is that number a positive number or a negative number? And that sets the stage for you to have a way of, am I making progress, am I doing better? And that leads into the bucket strategies and budgeting, so that, okay, my 50% needs bucket, the budget actually turns out to be 55%. It's a little bit more based on, this is the stuff I have to cover, where does that additional 5% come from? And in this strategy, it allows for that flexibility. You can pull it from your wants bucket, right? And so there's a bit of shifting. It allows for that reality of where you are and what are the circumstances, and how you need to continually monitor your bucket. So how do we create that budget? The first thing I'll share with you and suggest is, when we're starting to sit down, record, look at, monitor your budget, work in net numbers, not your gross, right? So what money is coming in the door, after taxes, after FICA, after all that stuff. What money is in the door every month from jobs, from other sources of income, whatever it is? What's the total number? That's what you need to that's the basic beginning point. Is we need to know what's the number of the dollar figure coming in the door, and then it starts working on how do we make that allocation for the needs bucket, that 50%. And if it's a bit of, well, what's the guidelines for that needs bucket? What are the parameters? I'll share those with you. So when we're talking about our needs bucket for housing, and you can categorize housing is to include everything to keep the home or the apartment going, so utilities also. That guideline for inside your needs bucket is somewhere around 25 to 35%. Okay? Food, basic groceries, food inside your dwelling, 5 to 10%. Car or transportation, vehicles includes gas, includes insurance. So just your vehicle budget, if you have one, 7 to 10%. Medicals, 5 to 10%. Any work-related expenses, stuff that you have to accomplish your job, 5 to 10%. And then that minimum debt service is 2 to 5%. Okay. Questions? We good so far? And yeah, the budget can do more than just track your spending. It also can help you work towards those financial goals, and this methodology also allows you to work with your life, right? It allows for this changes. So calculating your income, we talked about that. You have to know exactly how much is coming in. The tracking your expenses, how much are you spending every month for rent, mortgage, all the debt payments, loans, phone, cable, all of that. You want to know exactly how much is going out. When we look at analyzing your spending, here's a chance for you to review your needs and wants, and we talked about the flexibility for that needs bucket and wants bucket. And so when you're doing the tracking of your expenses going out, there's your chance to give yourself a review about, are all of these necessary, can they be adjusted, an accountability partner, a neighbor, friend, family member, significant other, active conversation about what's coming in, what's going out is going to be helpful. And so you make your first stab at the budget, the monthly expenses, and you subtract from the monthly income, and if that balance is positive, congratulations. You've made an effective budget. Good job. Stick to it. If that number is negative, and I've gone through plenty of times in my life where that number shows up negative, then it goes back to, okay, let's go back and review. Let's start in the wants bucket, right? What can we adjust? What can we change? What are we talking about? That 20% bucket, the third bucket, because of part of it being building goals for financial security like an emergency fund, that would be my second bucket to look at. The first one would be the needs, that adjustable, less going out, maybe it's not Starbucks every day, etc., right? Those adjustments that you can make. And then the monitoring and adjusting, we'll look at that in a second. Like we said, that you want to be able to have it be an active conversation. Budgets, just like most things in life, are not a static event. It's not a one-time, hey, I did it, the number worked, I don't have to think about it anymore, and I'm just going to go about living my life. So, tips for sticking to a budget. Obviously, we want to avoid impulse purchases. The part of having the discipline of a budget and reviewing it and having it be an active conversation in your life is to help you control those impulsive purchases. I've got an 18-year-old son at home, and he is everything but disciplined. It's all impulse purchases, all the time. So that conversation is part of our budget conversation of, like, you know, the Fortnite V-Bucks you don't necessarily need. They don't do anything. It doesn't help. So we're having that. The other suggestion, that cash for discretionary spending, if it's in your pocket, you can pay for it. If it's not in your pocket, and we've had that conversation. He is working. He's really good at spending stuff. He gets to walk with cash in his pocket because he works in the service industry and restaurant. So for him, it's like, I've got money right now, I'm spending it. And then he's come back to us Sunday afternoon, hey, I need money, I want to go bowling with my friends. There's a conversation. This is a great budget lesson for you to learn right now. You spend it all on Saturday. And again, like we said, regularly review the budgets. I've got some suggestions for how to stay on course. They probably will seem obvious, but it's also important to review and be reminded. Don't buy name brand products. The generics, store brands, can be as good quality for almost 50% less sometimes. My best example of that is Aldi versus Whole Foods. If you all shop at Aldi, you will understand that you get to walk out with twice as much for the same price, it feels like. And I do the shopping in our house, so I get to come home and I do my Aldi trip. And then there's a couple items at Wegmans I'll go to for the Wegmans trip. But I come home and I'll share with my wife that, look at all this stuff I got for this amount of price. This is like twice as much versus if I just shopped at the other store. She's not as interested or as fascinated by that as I am, but you know, there's the opportunity. So think about store brands and generics. One of the things that we probably don't think about too much anymore is out-of-network ATMs. Go tap Mac for those of you of a certain geographic persuasion. And the banks are really good about, if you're not inside our network, we're going to get you for a foreign ATM fee. And they're just those little, you know, the $2, $3 every time that can add up if it's something that you do often. Don't buy lottery tickets. Statistically, there's lots of evidence. It feels good to try to get a chance at $1 billion. And the alternative to that would be to save money and put it into a broadly diversified stock investment. Over time, you've got a higher likelihood of having a more positive experience with that than your lottery experience. The other one, which happens a lot in my house, is be aware of and don't buy too many apps on your phone, on your devices. There's lots of opportunities to have incremental prices creep up on you on your app purchases. Look for the free versions. Be very aware of in-app purchases. I also have a 13-year-old daughter, so there's lots and lots of conversations in our house about being disciplined around your app usage and app spending disciplines. So be aware of that. And impulse shopping. So if it's a thing that you're aware of about yourself, that you like to go on shopping sprees or you're an impulse shopper, what do you do about that? One suggestion is have an accountability partner with you, have someone that you bring with you to help you stay disciplined. Another idea that I've had clients tell me is they will take their shopping list and switch it with a friend of theirs who also has challenges with spending discipline, and they will buy their friend's list. And if it's not your list, you tend to be a lot more disciplined about it. So there's another strategy. And the other idea is about running a tab, right? Just running on credit and sort of not paying attention. If we go out to a restaurant or you go out to a bar and they'll ask you want to run a tab, no. You want to settle up, you want to be aware of, you want to be conscious of your money, not just in a restaurant setting, which is literally running a tab, but just in general out in life. Be conscious of running a tab versus paying for it because you can afford it. So I wanted to dip into some of the savings allocations. So that 20% bucket, what's that look like? What's some of the stuff in that bucket? And the big item in that bucket is an emergency fund. And I'm sure all of you are aware of it. Most of you probably have one. I highly recommend an emergency fund. The emergency fund is that amount of money that it's difficult to accumulate. It takes time and discipline for you to build up that emergency fund. The rule of thumb should be between 3 to 6 months of expenses. That is in an account that you do not touch, that earns some interest, low or no transaction fees that you can access, but it is there to literally be for emergencies. Cars break down, trees fall down, pipes burst, things happen, cavities, broken fingers, things happen, and having that emergency fund, having that pool of money that's available is life-altering. And it is challenging to build up, it's tough to do, and that goes back again to the bucket strategy of putting that discipline on yourself, dedicating yourself to at least 90 days of expenses. Ideally, you want to get to at least 6 months. There are lots of conversations, and there's some resources I'll share with you that get into how do you grow that. There are individuals that will target, I want 9 months, I want a year, and if you can get into that area where I've got a year of expenses saved up, that gives you, again, not only is your net worth healthy and vibrant, you also have peace of mind, right? That sense of, I'm good. Whatever happens, job loss, job change, emergency, engine for the car incident, I'm good. That goes a long way towards reducing stress, reducing your anxiety about your money, having that budget discipline. So that would be my soapbox encouragement is emergency fund is one of the core foundational pieces that when you get into having a healthy net worth and financial security, it starts with an emergency fund. Short-term and long-term savings. The savings accounts at banks, be aware of what they will and won't pay you for putting money with them. Banks are designed to earn a profit for banks, not to bash on banks, but that's why they're there. They're looking to grow their profits. So the savings accounts that they offer may or may not have a very good rate of return for you putting your money with them. There are certificates of deposits, sort of short-term guaranteed. I will give you, the bank, an amount of money, and over the course of 6 months, 9 months, a year, you will guarantee a return to me of whatever that rate might be, somewhere in the low to mid single digits usually. That can be a strategy. They're fine. The checking accounts usually don't have a very high rate of return for, that's your active money in and out. At banks, if the banks offer you a money market account, and we can get into this our next series, but I'll touch on it now. The money market accounts are cash, they call them cash equivalents. So it's like having cash, and they're getting a higher rate of return for having that money there. Investment firms do it, some banks do it. Credit unions, by the way, I'm a big proponent of, big fan of credit unions because credit unions are there to be supportive of their members. They're not there to be making a profit, so big fan of credit unions. They tend to also offer these different types of accounts. Savings accounts, their rates tend to be a bit better. Checking accounts, money market accounts, whether it's at Vanguard, at your bank, at a credit union. If you have cash, an emergency fund, and you know you're going to set it there for a while, you want that cash to be working for you, earn something, and the money market rates tend to be better than savings account rates. And again, money market, it's cash equivalents, it's just like cash. They're guaranteeing that the dollar you put in will stay a dollar, and they just have better rates on it. Okay. Questions about that? No? Okay. And then this allocating your money goes back to the bucket strategies about the 50, 30, 20. So let's talk about, as we've gotten into our budget, we're starting to work with our buckets. We've got our wants bucket, we have a needs bucket, we're looking at this 20% savings and investment bucket. Part of this is, what are you going towards? What are the goals? Is one of the goals an emergency fund? Is another goal maybe retirement savings? Is it a vacation? Is it a new car? Is it the Christmas budget? Whatever that is, what are the goals? You want those goals to be, we have the acronym SMART. You've probably seen SMART goals in other aspects of your life and work. We want those goals to be specific, So it's not, I want to travel, it's where do you want to go? I want to go to Yellowstone Park, or I want to go to, you know, Toronto or Italy, wherever it is. Be specific. What's measurable? How much is it going to cost? It's got to be something that you can make progress towards and keep track of. Is it achievable? I want to go to the moon. Good specific goal, probably not achievable. Are the goals relevant? They're not my goals, they're your goals. So what I find important, or what I'm dedicating my budget towards, has nothing to do with you. What you're looking to make as a goal, those are your goals. So my opinion of your goals, that doesn't matter. They're important to you, so they're valid. So are the goals relevant? And then set time-bound goals. So I want to go to Yellowstone Park, and I want to have a budget ready to do that trip in the fall of 2025. Okay, now I've got, how much is it going to cost, do I think? How much do I need to allocate each month in my savings and investment bucket? So now I'm starting to do the math, now I'm starting to make my adjustments. So SMART goals, make them specific, measurable, make it relevant to you, make it time-bound, right? So that's helpful as you go through this budget conversation. So the tips for achieving your goals, about staying motivated, regularly review your progress, adjust goals, and celebrate milestones. I'll start with the last one first. So celebrating your milestones is really important. Mentally, emotionally, we need to feel like we're making accomplishment, making progress. So if you're setting your goals and you get your budget dialed in and that number is positive and not negative, celebrate that. It does not mean go out and buy a new car when you don't have the budget to buy a new car, but it means acknowledge yourself. Acknowledge, give yourself praise, give yourself, whether it's going to go to Rita's or we're going to, you know, go to the movies, whatever that is, celebrate those milestones as you're making those progress. It's important to do for your mental health. So when do we want to, along with sort of regularly reviewing and checking our budget to make sure we're still on pace, when are there significant events that we really do want to review the whole budget, start to finish, and consider if we need to make big changes to it? When you get a raise, figure out what you want to do with that extra money now. Is that extra money going to come in and we're going to dedicate it towards the goals and investments to sort of pay extra money towards lowering our debt obligations? That's a good strategy. Do we want to just have that extra money and put it in the wants bucket? And we want to have a little more breathing room and celebrate a little bit more? That's okay too. But where does that money go for a raise? Maybe it's recovering from a previous financial emergency. So you had to go in, you had to tap your emergency fund for whatever that event was. It's been taken care of, that's good. Thank goodness you had your emergency fund. Now, we've got to start again. We've got to start over. So we've got to go back to our budget. We have to build back our emergency fund. What adjustments do we need to make in the first two buckets? Right? Make sense? Move to a new city. You really do need to look at your budget, have to go back, because it's a whole new set of expenses. There might be different costs of living, which might be more, might be less, but we have to review. It's not the same situation. You do pay off the debt. So you do have credit card debt. You've been paying, you've started to allocate, and you made some additional payments to it. You've gotten it down to zero. That's awesome. Celebrate that. No credit card debt is a great place to be in life. Now what do we do with that money? So that additional $200 a month, that additional $400 a month that we were paying, now where does that go? Does it go into wants? Does it go into investing? You have to make that decision. Job loss. Clearly, there's a radical and immediate budget review on the job loss. It's not something that we're just going to, I'll worry about it, I'll go find another job. You have to pull in everything, review everything, what needs to change, what can we do. That emergency fund, you've built up the emergency fund. Okay, what are we doing with the emergency fund because this is an emergency? Welcoming a baby to the household. For those of you that have children, you know babies are expensive, and then they grow up and they continue to be expensive. So that impacts the budget. Getting married or moving in with a significant other, that also can be a positive in the sense of you're having these two budgets come together. There could be additional assets available to allocate and review those allocations to the budget, the buckets. That's great. The challenge is also to be conscious of expanding your lifestyle. Oh, we've got two incomes. We don't need a budget. You still need a budget. Or buying a house. The other one, obviously, if you get into purchasing a house that comes with, for the homeowners in the audience, that comes with a whole host of really expensive stuff when it comes to maintaining that house and upkeep. So you got to have that budget discipline. Talked a lot really fast. Questions? No? Any questions online?
Nothing in the chat.
Okay. So we talked about budget this time. There are two resources I would recommend. One is a book by Chris Smith. It's called I Am Net Worthy, and it delves into that concept and gives support and ideas for basing your budgets and your goal about net worth, achieving a positive net worth. It's good, solid, financial disciplined approach. I like Chris Smith's writing. The other one, which I highly recommend to all of you, is the Infographic Guide to Personal Finance. It's a wonderful, wonderful guide for what we talked about tonight. The concepts about financial investing, about financial topics. Budgeting is a big deal. Great infographics, big pictures, very specific numbers, lots of good data about how to get yourself out of debt. There's sections about credit cards, car insurance, the conversation we had about reevaluating your budget. There's an infographic page about that. So this is an excellent resource for helpful, specific, quick information around how we go about budgeting.
So what is that again?
It is in the Infographic Guide to Personal Finance. Michelle Kagan, C-A-G-A-N, and Elizabeth Orethi.
Okay, thank you.
Great book, great resource. I really enjoyed it. So that's our conversation tonight. I'm here, so if there's any other additional questions, I'm available, happy to talk. The next is going to be more about stocks and bonds, public markets, investing, stock ownership, what's that mean, how to think about it, mutual funds, ETFs, retirement planning, retirement investing. Okay?
Any actual questions? From anyone on Zoom? Speak now.
You
Okay.
explained it well.
Thanks for coming
Thank you,
out
Christian.
tonight. Thanks for braving the elements.
All right.